Good morning from Creston, British Columbia, here in Canada, in northern USA, southern Canada. How you doing? Welcome from British Columbia, all of you to Stock Markets with Bruce. Welcome to June the 7th, 2021, Monday. Getting ready for a full week of trading. I'm reading online that the man behind the IPOE SPAC, Chamath, is holding a lot of stock, which he sold for a profit on previous SPACs that he did already. Should we be worried? No, I would not be worried. I believe that, first of all, I don't think he's interested in selling any unless he had to, and I don't think he has to, number one. Number two, I don't think he's interested in selling down here because he knows what we have been talking about. He is aware of the book value of this company. He knows that the book value is approaching $30 a share. He also knows this is day 5 of listing. The last thing he wants to do is sell stock right away to crush his own market. Pointless, because it'll put a stain on all of his other deals going forward and forward and forward. His best move here is he's just going to sit tight and he's going to be the promoter. He's going to basically be the biggest cheerleader for this company. And he's going to give us indications that he may likely start saying, I have no intentions of selling this unless it's trading in the 3 handle range, which is 100 or more. And that'll put to bed any issues of stock available. I just don't see any stock available from him. And I would not be surprised that most of the stock he has is restricted from trading anyway, and he can't sell it even if he wanted to. So I just don't see any stock coming out right now from any large sources. All right. Whether you like him or not, doesn't matter. The guy's a moneymaker. And I think that he's doing the right thing by bringing out SPACs. And this one here, I think, is his crowning achievement. I think this is the best one he's brought out. Certainly the most solid of all of them. This thing is a cash money maker. Remember, Sofi is making money right now. It's not like they're going to make money. No, they're making money now. They're already profitable. It's the profits that are going to continue to pile up here and grow out that's also going to drive this stock. So this isn't like a speculative, oh, I hope they make money someday in 5 years kind of company. No, they've done that already. That was done as a private concern. They are a money maker, and they're going to grow nicely. Uncle Bruce, love you. I want to clarify. I wrote a call contract, 272.50 GameStop last Friday, expired June 11th. Okay, that expires in 4 days. Just sold it at $26 a share. Means break even for buyer to exercise $298.50. Yes, that's true. For the buyer, they need at least $298.50 on the stock. Absolutely. So the stock is $261 right now. You just wrote a $272.50 that dies again on the 11th. That's this Friday. You got $26 a share cash. And so you just committed yourself to selling your stock for $298.50 a share because you're going to get $272.50 if you get exercised, including the $26 you just got. So yeah, you're if you paid $150 for it and you're going out at $298.50, theoretically by Friday, you've almost doubled your money. However, if the shares stay under 272 this week, they reach this level, or even if they go to 275.80, you may not be exercised right away, and they back off to 265, 270 on Friday afternoon. This contract dies for zero, and it's all yours. On the other hand, if the shares are trading at 285 on Friday afternoon, they're in the money, but at 285, they're only worth $12.50 a share. And you might be able to get them back for $13, $14, which is less than what you got for them. You still make $12 on the contract by just buying a contract back. Any 272.50 contract for this Friday that you buy back between now and Friday takes you off the hook for the offer of the exercise price. And whatever you pay for that contract is your difference. If it's less than 26, it's your profit. So if you can profit $12 a contract, a share on this contract, you're going to clear $1,200 profit on top of whatever the stock is doing, obviously, in the meantime. Right now, we're $260 on the stock. You're $12.50 out of the money. And that contract that you wrote for $26 right now is technically worth zero money because it's out of the money. But it has until Friday, and that is a time premium right now. Uncle Bruce, could you explain how high short volume could affect a stock's position? I'm kind of a noob. It's kind of a noob question, but I'd love to hear what you have to say about that. Well, Back in summer last year, June the 10th, I did my first video on GameStop. And at the time, there were 70 million shares in existence, and there were 70 million shares shorted against the stock. And it was 480 a share. I commented in that video that, there could be a short squeeze someday the way this is setting up, because this is unusually high. This is ridiculous how many shorts there were against the stock that existed. Knowing there's only 50 odd million free trading, how can there possibly be 70 million short? But there were. When we know what happened, the stock eventually did get a short squeeze. The first squeeze took it to about $20 and kind of leveled off there for a while. And then another squeeze came on and it took into that $40, $60 range, leveled there for a few days, and then took it to the 120, 140 range. And we found out in short order, there were all kinds of, a couple of hedge funds and other players who were short stock that lost a lot of money. But they covered themselves out at 40 a share, 50 a share, 80 a share, 120 a share. They covered and they left. But there were billions lost already. But that didn't stop the stock from going higher because there were other shorters taking their place. So a shorter would buy back their stock, but a shorter was shorting it to them. It was just a rollover of shorters. And one guy got out and another guy got in with fresh cash. And the outside world was measuring how many shares were being covered and not covered by daily trading volumes and reports. And the shares kept going higher because the retail investors out there smelled the blood in the water. And sure enough, the stock went to 480 a share on GameStop as the short position slowly but surely unwound itself. Anyway, we've had gyrations ever since. And even now, there are 20-something million apparently short on GameStop, and we're at 263 a share. We're nowhere near the 480 or 500 that the stock once hit, but we're halfway there now. Pretty good. But high short interest can bring in speculators who are smelling the opportunity that there might be an opportunity here to shake out some short sellers if this stock pops up a little bit with enough retail interest. And AMC is a classic case where it went from $12 a share 2 weeks ago to 76 last week, backed off into the 33 range, 35 range, and now we're back to 55 again on AMC. Who knows? Uncle Bruce, VACQ, is currently not trading call options. I'm going to go long. I was wondering if you know why some SPACs trade options and others do not. Is it just a time factor for a meeting? Probably the reasoning is the company may have had to apply for it. They may have had to pay a fee to the exchange to create to be able to have options created. I don't exactly know this routine. I've not run a publicly traded company since 1991. So things have changed, and I was up in Canada, so. There were no call contracts on stocks like mine when I took my company public. Today's world, SPAC world, it might be up to the management of the SPAC to actually initiate, the procedures. And it could be that this afternoon or next week you see contracts pop up. It could be. I can't imagine it won't go much longer, because sooner or later there will be contracts on this stock. But I don't know if it's going to be right away or until after the merger. That I can't tell you. There's no law saying they must. To follow up on my Sofi question, I was hoping to roll profits into more shares. I want to be in on Sofi long-term as a shareholder. Right. So as these contracts go up in value, as your stock goes higher, you'll be able to sell them down the road, maybe at 5-10 times what you paid for them. And then you take those proceeds and put it all into stock. Or maybe you put 80% of the proceeds into stock and 20% of the proceeds into a new call option 8 months out, just around the $255 higher than where you're at. You might do that and be a long holder of stock, a long holder of long dated contracts, and now you're a short-term option writer to enhance income. You could think about that. Yeah, for sure. Very good. Very good. Uncle Bruce, if there will be time depreciation as January and we lose value on that, shouldn't we be buying July and August calls of the lower time value, perhaps, maybe with the lower stock prices? No, because the theory is that the shares might not move until the day after those expire, and you need to have the 8-month time frame. I want your stock to go up today. I want it to go up this week. I want your SoFi and all your other stocks to double in price immediately. That's what I want. I don't get what I want all the time. I get some things, but not other things. And so if you have January call contracts that are way out there and the stock doubles on you in the next 2 weeks, you're going to sell those call contracts. You're going to get just about as much time premium as you had before. But you should consider this too. And you can take a look at these, look at, for example, stock call option charts, option chains. On traditional normal trading stock like Apple, maybe. Let's take a look at Apple and try to find call contracts for Apple for next January or so. Take a look at where the stock is. See where the contracts are trading for next January at the market. And then look forward every option contract after that and notice how cheaper they get the further out they get. There's that. And then look at a call contract for Apple, an option chain, where the contracts only have 3 months to live. Look at the same contracts. You might want to write these down on a piece of paper or take phone shots with your phone, screenshots with your computer, what have you, and compare call contracts that are expiring sooner at the same level and notice the shrinkage of value. That'll help you understand how contracts will work. But you need time, because if you're going to get a $5, $8, $10, $15, $20 price move on these contracts, they're going to go up. But I can guarantee you that a call contract that's in the money, and this is something I want you to look at. I should have mentioned this. Let's say you're looking at Apple and you want to buy a call contract that expires a month from now and it's at the money right now. Take a look at the value of that contract and then look at the value of a call contract that's 5 in the money, 10 in the money, 15 in the money, and $20 in the money. Same date, same expiry date. But take a look at those and notice how little premium there is on top of the value of the book value of the contract on each one of those. That's what happens to you guys with your SoFi or any of these calls. If you have SoFi $20 call contracts, the stock goes to $30, it'll have a $10 book value, but it won't have a $4 premium value on it anymore. It might only have a $2 premium value. But if the SoFi goes to $30 and it's 20 in the money, the premium value of the premium time premium might only be $1.50. And if you're another $10 in the money, it might only be $1. It's almost all book value. The more in the money you get, that's how these contracts work. So keep that in mind as well, all right? FAII November 2020, 1250s for 170 contract. Good deal. 1250, 170. Yeah, but I would prefer you had January's, but you might not be able to get them, right? Those might be the longest ones available. So if you can get them for a little less than that, but I don't know if the market will give them to you any less. But you got to pay it. You got to pay it. If the stock goes to $15, they're worth $2.50 plus premiums. They'll probably be worth $3.50 to $4. So there's a double, right? But there you go. Very interesting. All right, I got to go, guys. I'm 12 minutes over. I better get some rest, and I'll do some more due diligence, and let's get ready for this afternoon at 3 o'clock Eastern time. We're 272 on Gamestop. We're up on SoFi. We're at 2090 now on SoFi. Did any of you get the dip today? Beautiful. AMC 5650 up 858. Gorse 1426 up 22. The Dow down 123 at the low of the day, but it's not a big deal. Thank you, everybody, for being here, and thank you for following me and becoming members of this channel, subscribing to this channel. Thank you for subscribing to this channel. I love that you're subscribing to us. We've been climbing a little higher, 163, 99,163. We've added a few subscribers today. Thank you for joining in, and keep it coming, and tell your friends. Let's have some fun and make some money. Let's make a bunch of money. Show me the money. Thank you, everybody, for that. If you'd like to talk to me about a 1-hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.